What's up investors, my name is Gagan Grewal and today we're talking all about Palantir. So without wasting any more time, what does Palantir do? Well, Palantir Technologies is a public software company that builds enterprise data platforms for use by organizations with complex and sensitive data environments. So from building safer cars to planes to discovering new drugs and combating terrorism, Palantir helps customers across the public, private, and nonprofit sectors transform the way they use their data. It was founded in the early 2000s by PayPal co-founder Peter Thiel, and it's grown to have a total of 139 customers now. Yeah, that doesn't seem like a lot, but each customer on average contributes about $8.1 million in revenue for Palantir. So you can see these aren't small companies using Palantir, and the companies that are using their software, they now are using more and more after realizing how much it can actually benefit their organizations. And don't forget to smash that like button and subscribe to this channel as we got loads of interesting topics that you wouldn't want to miss out on. The Denver-based company offers three platforms: Palantir Gotham, which is used primarily for government agencies, Palantir Apollo for banks, financial service firms, and hedge funds, and as well as Palantir Foundry used by corporate clients. So Palantir software is used to analyze data and develop solutions to these complex problems for businesses and governments that have to sift through mountains of data. So Palantir software and predictive analytic capabilities, they can help fight crime, predict COVID-19 outbreaks, analyze performance data, assist companies with the migration of IT systems, support law enforcement, solve supply chain problems, and support effective risk practices. They can pretty much do everything. And one of the biggest entities that collect data are governments, because they have endless amount of databases containing information about their citizens, which is also why the government business is an important cornerstone for Palantir to leverage its growth. So taking a quick look at Palantir's stock price, it followed a new trend to go public last year. Instead of pursuing an initial public offering, which is creating new shares, underwriting them, and selling them to the public, Palantir actually went public via a direct listing, which means that no new shares were created and they're only selling the existing outstanding shares with no underwriters involved, which cuts out the intermediaries and is a lot cheaper. So when they went public, it was around $10, and it came to a high around $45 before falling back to around $20, and that's where it appears to have settled for now. So now let's take a look at why Palantir stock could be a great investment. So information is the most valuable commodity, and a firm that can make sense of and help monetize growing data volumes is set to make a lot of money. And government is a lucrative source of revenue for Palantir, and the firm collected 56% of its revenue, or $610 million, from its government customers in 2021. And in the first quarter of 2021, Palantir saw its government revenues grow by 76% year over year, and it's on track to crack the $1 billion annual government revenue threshold by the end of this year. And I don't want you guys thinking that I'm giving a biased opinion here, so we will definitely go over some of the downsides to this stock. But before we do that, I want to talk about the firm's long-term growth plan, because the revenue growth is to be at least 30% from all the way to 2021 up to 2025, with growth rates possibly falling below 30% only at the very end of 2025. And so far they've been doing a great job of hitting these targets. On May 11th, the company actually notched its first quarterly profit by growing its revenues by 49% year over year to $341 million. And they're actually implying a 43% growth rate for the second quarter to get $360 million in revenue. And Palantir's own revenue guidance may be carefully formulated, as the firm is still in a phase which it enjoys revenue growth rates approximating 50%, and these rates will normalize over time. But Palantir is set to quintuple its revenues by 2025. So that means it's set to increase 5 times its revenues by 2025. So revenues can grow from $1.1 billion in 2021 up to $5 or $6 billion over the next 5 years. And this is assuming gradually declining growth rates, which are historically validated. So these aren't overly optimistic revenue projections either. And also, they're in a very good financial position as well. They have over $2.3 billion in just pure cash, and they only have $667 million in current liabilities. And if we actually go into this a little bit deeper, those aren't even full liabilities. If you look at their deferred revenue, they have 186 million, and customer deposits, they have 250 million. Those aren't even liabilities. That's money to be earned at a later date. It's just not recognized yet, so they have to put it in liabilities, but that's money that they will later receive. So the only true current liabilities that they have is just 17 million. So they can pay that off like 10 times over and over again. But again, why would they when interest rates are so low? I don't think it would be a really smart idea to pay off your debts right now, maybe when interest rates go up. So the market needs to understand that Palantir is going to quintuple its revenues in 5 years, and that a government focus is a strength, not a weakness. And once the market does that, Palantir should break out and revalue higher. And last but not least, guys, before we talk about some of the risks of this business, I just want you guys to know, if you guys go onto their website and click on recent news, just look at all the different partnerships and agreements that they have with other companies. So this is just a few days ago, they expanded their partnership with the Space Force. They have a partnership with the Royal Navy. US Coast Guard renews their partnership. Palantir and Ringer extends their digital transformation partnership. So these partnerships are everywhere. They keep getting them over and over and over again. So this just proves that everything they're doing is working. So now jumping into some of the risks. One of the main risks is Palantir makes very specialized software which may be difficult to scale and maintain. So Palantir describes this in their 10K report as their platforms are complex and may have lengthy implementation processes and exclusive arrangements or unique terms with customers or partners, which may result in significant risks or liabilities to us. So this means that even though they do sell software, it's not as easy as going onto their website and signing up. It actually takes a few weeks. You have to actually send them an email and kind of contact them, let them know what you're looking for. So it is just a very lengthy process. So the second risk that I noticed is that it seems like everybody is convinced that Palantir is going to change the world with their tech, solving all the big data problems that other companies couldn't, and making their investors a fortune in the process. Like some people are saying it's going to 500, some people are saying it's going to 250, and while that all is possible, there is a huge lack of clarity about the business, and this is a risk itself because it makes it more difficult to generate smaller customers. But let's just say it is because they have to be, since they deal with some secretive, privacy sensitive areas such as the military and surveillance. We can let that one slide. So the last area is privacy. Since Palantir has gone to great lengths to paint themselves as a privacy focused company, well, what happens when there's a data leak? Facebook has these leaks all the time, and it doesn't really hurt the company as much, but they're usually just losing their own data or their users, and they may lose a few customers, but people will always continue to need social media, whereas any hacker leak could severely damage Palantir's reputation. So the Palantir stock was off by more than 50% off its January 27th peak, but it's still up nearly 200% from its September 30 debut when Palantir launched a direct listing priced at $7.25 a share. So this company isn't cheap by any means, it just has a lot of growth potential because Palantir continues to post double-digit growth and it's expected to turn its first annual profit this year. But with Palantir scoring its first profitable quarter and the stock is turning up, it is a promising watchlist candidate. So also keep an eye on the overall market. The market uptrend is currently under pressure, which makes all purchases a little bit riskier than usual. So please take a second to subscribe if you guys like my content, and I'll see you guys next time.